SPY, we see we're continuing with the uptrend. So I'm expecting a retracement, but I'm not going to call it. I'm not trying to call tops or bottoms. That's the highest risk, lowest probability shit that you could do on this planet. Why get caught up doing that? We're trading the trend. We do see that we had excessive amount of days. So basically from here, we have what? 13 bars. So we have 13 days of moving up. So I'm expecting some type of pullback, but I'm not going to call the top or bottom. But again, SPY and the components of the SPY are doing well. So you got the Bank of America looking well, fill that gap. You got Goldman Sachs looking to test this previous top. You got Wells Fargo pretty much moving very, very well. Again, I'm expecting some type of 7 bars in. Okay, give a little pause if you want to say you got it from back here. You got around what 13 2 weeks of pretty much moving pretty consistently up. Expected some type of retracement to continue the bias that we have based on the underlying or the bigger picture. What the bigger picture would be, of course, weeklies. You look at the weeklies for Bank of America again. You see it fill that gap. It's not looking as sexy as the other one. Goldman Sachs again has the same thing weekly. Let's look at the QQQ. QQQ, we can see that on the daily we might be having a high tight flag being put in place. See if we get continuation again because of the weekly. We have the bias. The week has just started. It's Monday, so don't worry about this last candle. Continue to the higher part. So let's look at Apple. Apple, I mean, let's see what happens for the intraday. You see it faded pretty much. I would suggest it's probably just profit taking, but again, that doesn't give you a reason to get bearish. Okay, you got Google just turning sideways. I mean, it's not really giving you much. I mean, maybe you bought this dip right here, which could have gave you a little decent pop, about 1.5%, 2%. Might have the breakout guys come up here and look for it to test at least here or back up to these levels, and that's fine. You got Netflix in that area. You have a little toppy shooting star type of pattern. Again, if the high gets broken in that, then it continues to the upside. But again, this move from down here, you're talking about, was it 16 bars in? So again, at 16 bars in, I'm expecting some type of pullback. Even if you took from just this point right here, you say, okay, got about 7 to 9 bars up, moving up. We just kind of look and see what we can get, and again, give us a retracement, and we can continue to the upside. Twitter. I mean, if you're playing this, that's fine. Maybe from the engulfing pattern yesterday, maybe you got in and pretty much just gone from there, but not a name I would look at. Facebook actually did really well today. Bounced up, looks good. Consolidation from the box and breaking above it. So it broke above this high. You got 1, 2, 3, 4. You got from the high, and it pretty much looks good. So I would see some continuation for this strong volume, and at the start of the move, if you want to call it that, versus the exhaustion part of the move. It looks good. So again, who else we have? We have IWM. This one might be given, if it can break above this high, you have an inside day. Inside day could be a gift. So if it breaks above this high, you're stopped below the low of that. See where it goes. You got the diamond. Diamond, you might be having the same type flags type of formation that we saw in the QQQ. That one might be looking good as well to continue. Again, do not try to guess the top, guess the bottoms. This stuff. We've seen last year, 2013, a lot of people got ran over because they were trying to do just that. And I'm not looking to do that at all, because if you look at this is pretty much, and you could say the volume too. Trust me, I was looking at a lot of the volume as well, but the volume is, who can be the volume? Who knows? But what you want to look at is say, okay, volume, whatever it is, this is a trend. Okay, we had some pullbacks, but this is a nice trend. So again, people were hating it going into the third quarter, fourth quarter, and so all this was, it's going to cream, and then they got squeezed to all shit. So you just have to look at that and say, okay, my trend, I'm going to have my bias toward the trend until I don't. And even if you take some, it gets back above these moving averages. This is just a 50, 21 and 10. You kind of look at it like that and say, listen, I'm not going to go against this. And if it does give me some short opportunities, I will take them. But once it gets back, I won't become a perma bull or bear. I will see what it gives me, play the hand it gives me, and go from there. It's what the market gives to you, what you're trying to take out. Because a lot of people today, today was not the best day to really be getting a lot of movement. If you look at how tight these candles are. These are hard days to intraday or try to get a lot of swing trading from, especially low volume. So you got to just take it by ear that if the market doesn't provide you an opportunity to trade, then you do not trade. Versus, shit, I'm bored. Fuck it, I'll put on a trade, see how it works, because nothing is going on right now. Well, if nothing's going on and none of your setups are setting up properly, that means that you stand down, sit on your hands, and wait, because you might not get any profit today, but you might get 3 times what your typical profit is tomorrow if you could just be a little bit of patient, have a little bit of patience. So that's my story, and hopefully this helps people. So take care.